Hi traders, this is Chris with the sixth part of looking at defining the trend. Before we do that though, be aware that trading for exchange or global financial markets is considered high risk, may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This video is for educational and informational purposes only, and by continuing watching this video, you agree with this disclaimer, plus you're aware of the risk involved when trading. Alright, thank you so much for your attention. We're going to take a look at a bit of a trend continuation here. Basically, when does the trend end? Of course, at one point or another, the trend trading has been giving us hopefully good trades, but at one point we're going to have a reversal or some retracement, and we want to know when that's going to happen. We don't want to start trading at the end of the trend. Obviously, we want to be smart with the trend traders and not jump in somewhere where there's a high likelihood of a reversal or perhaps a shallow or bigger correction. So that's very important, of course, to realize when that environment could change. Now, the thing I wanted to talk to you about is the path of least resistance. So the path of least resistance helps us understand when basically that reversal could happen. It looks at two factors, energy and resistance. Or in other words, there is a continuous battle between those two. Price is either moving fast and showing a lot of momentum, which is energy, or price is perhaps stopping at support or resistance, which is basically resistance, right? So there's this battle, this continuous battle between momentum and support and resistance. In some cases, momentum is stronger. In other cases, momentum is weaker than support and resistance. Now, if momentum is strong enough, it will push through the resistances, right? As you can see here, price has gone through these purple lines and has kept pushing upwards. So the trend has been able to continue. But with the last level, as you can see, there's a bit of a struggle in this screenshot. And in this case, perhaps support or resistance will win. If that is the case, momentum and price will stop and either revert into a reversal or go sideways. So, the stronger the confluence of support or resistance, the more likely support and resistance will win. Whereas the stronger momentum is, the more likely momentum will win when it approaches support or resistance. So it's always this battle. Now, with that in mind, let's move over and talk about how far can retracements go. Now that you have a weapon, an idea here, how to measure, how far the trend can go and how much it could continue. When we do get a retracement, how far can we traders expect price to go? Well, obviously, the trend typically stops at a point when momentum becomes weaker and typically stops in an area where support or resistance shows strong confluence, right? So that is the moment where we get the motion against the trend, and I defined three things: a light pullback, a deep retracement, or a reversal. And to answer that, it's very important to look at divergence, all right? Now, in this case, you get a clear price action signal that price is breaking through resistance, so momentum is winning here. But here you can see that basically momentum is losing its power to the upside, is weakening, and you can see divergence is indicating that, right? At the bottom you can see the oscillator is having lower highs, price is having higher highs. There's a divergence between that, which refers to the fact that price is losing momentum, and we're seeing a pullback, a retracement, or perhaps this could even turn into a reversal. So divergence is a key thing. The more divergence we see on the currency pair, let's say the weekly, daily, and 4-hour chart have divergence, well, then there's a serious and very high chance that a reversal will happen. But let's say we see divergence only on the 1-hour chart. Well, then, in that case, there's probably a better likelihood that price will make a light pullback or maybe a retracement, but not a reversal. Obviously, the more divergence that is visible, the more likely that a reversal will take place. If there's no divergence present, well, then there's a good chance that the trend will actually continue. So that's basically very important. Now, when looking at time frames, typically I'll look on a 1-hour chart or lower. I think a single divergence is typically a reason for a light pullback, whereas a double divergence typically creates a deeper retracement. A 4-hour chart or higher, when we have a single divergence, we could get a deeper retracement or a reversal. So let's talk a bit more about what that looks like. Basically, when we get a light pullback, I'm looking for price to go back to an 8 EMA. If price bounces off an 8 EMA, it's basically a very shallow pullback, and it's actually more of a momentum continuation. However, if price goes back to the 21 EMA, I consider that a shallow pullback. So whenever price goes back to 21 EMA, it's not really much of a retracement. It's just kind of it could be a consolidation zone, it could be a bear flag or bull flag, it could be a sideways zone. Typically, price will hit the 21 EMA and continue. For instance, right here you can see price moving back to the 21 EMA. There are a couple of examples here where price is using 21 EMA for trend continuation. But also we see a couple of moments where price goes back to the long-term moving average and still bounces at those levels. I use the long-term moving average, a 144 EMA, as a level that I consider a deeper retracement. As price goes back to that and bounces, that's what I consider a deep retracement. So let's talk about that again. 8 EMA is just a momentum continuation, very light pullback, ultra light pullback. 21 EMA is a shallow pullback, and 144 EMA I consider a deep retracement. As price goes back to the 144 EMA, well then that has been a reasonable deep retracement, but still within the trend. Now the reversal happens, in my opinion, when 21 EMA crosses the 144 EMA, and that's when we get the reversal, especially if a fractal is also then placed below actually the 144 EMA, as we can see here on the right side, where I have the arrow or the mouse arrow there. You can see that's when we get the trend reversal. All right, and if the 21 EMA keeps touching and hitting the 144 EMA, well then we're in a range, and price is not trending or reversing. All right, so those are the basically the classifications I use to understand what's going on in the market. And if you're interested in that, maybe you want to take a look at opening up an account with Admiral Markets. You get our moving average course valued at 890 euros, for free. Plus, you get credit that you can use to order other systems and tools from our website as you trade and you collect volume month per month. You will also get credit for our website. So make sure to grab that opportunity and join us through this link, and wish you all great trading. Cheers.